guys, and welcome to Mentor Muse YouTube channel. My name is Alan Arundan, and first of all, congratulations on going through the content on research. Now, the challenge is to actually look at these assumptions that we have actually researched, because remember, the data that actually the company presents versus the kind of research that we have done not necessarily will match in terms of numbers and matrices, right? So the challenge that we're going to face today in today's lecture is how can we take all that research and try to convert that in the numbers that is understandable in the model that we are actually making. So let's get started. Hi guys, and welcome to the next session. And we've just completed the research, which I took you to what are the kind of assumptions which we can actually take for our model. And what I've done is in between the last and the previous session, I've also updated the data for 2023 so that we actually don't have to, because as we speak, the FY23 results are also in, right? So we don't really have to forecast that, and it also gives us a little more clarity on how the business is actually doing, right? So somewhere close to this line is where I had actually forecasted also in the original model. But again, the results have come in, so I've updated everything, including the income statement, the balance sheet, and the cash flow. Okay, so if in case if you're wondering why the template has changed, it's only because I put in the updated data of FY23, right? Okay, so now based on the research that we did, now the idea is to get a sense of what kind of store growth are we expecting, right? So if you remember in the Tanishq segment or brand, the company also and plus our research suggests that we will be targeting close to about 600 stores by FY27, right? And it is pretty convincing to the idea, because if you look at the amount of store addition which is actually taking place between FY22 and 23, that's about 34 stores, right? So in order to actually reach from 423 to 600, if you just do a simple mathematics here, you just calculate 600 minus 423, right? And you've got about 4 years, right? So you've got about FY24, 25, 26, and between 26 and 27. So you're basically talking about 170 stores, 177 stores, right? If you divide that by 4 years, then you're getting about 44 stores addition taking place every year, which doesn't look like a very large target considering that they're already doing 34 stores addition, right? Similarly, what the best way to do it is, because you can't really predict, although people try to do that, but you can't really for sure say that, okay, these are the number of stores which are going to get added each year, right? So you take a long term, vision of how many stores the company has said or has promised or has guided us that it is going to target, right? So it looks like 600 is what they've targeted. So I put in the final number, and then we get a linear calculation here to fill in those numbers. Okay, so Zoya is something that they've been very very slow. In addition, so we're just going to assume about 1 or 2 stores each year, and primarily also because Zoya, okay, and sometimes the brand Mia as well, they have been trying to add up or probably trying to combine the stores of Tanishq and Mia together, and Tanishq and Zoya together, right? So not much calculation will be needed here, apart from 1 or 2 odd stores, which we continuously see that the company is doing in Zoya. Now, cart lane is something very interesting, right? So if you go back to the research PPT, okay, so if you come back to our assumptions on the cart lane stores, right? So we're expecting somewhere around 395 cart lane stores by 2027, because believe it or not, this is one segment in which the number of stores which they're actually adding is huge. Okay, and 300 Mia stores in the small store segment by 27. So 395 cart lane stores, 300 Mia stores. Okay, the number can be more than that, but I believe that at least this many stores should get added. So let's put in these numbers. Okay, so 395, and if you look at the updated numbers, they've actually been able to add close to about 84 stores. So that's a lot of stores, right? Because And if you do the same mathematics that we did for Tanishq, right? So that's about only 173, right? So if you divide that by 4, then it's just about 43. Should be able to do it pretty easily, right? And about the Mia stores, with this small segment, we are saying about 300 Mia stores by 2027, right? Now, coming to the world of Titan assumptions, so if we go to the watches segment, if you see, the management has a vision of 2.5x of its variable segment, but next 2 years will be critical. Now, when you say next 2 years will be critical, this was the statement made in FY22. Okay, because every 5 years, the company actually comes and gives a long term vision of what the company is trying to do in the next 5 years. The last 5 year plan that the company actually shared, in that was somewhere around FY 2015, targeting a 40,000 crore market total revenue that got actually achieved in FY23. That was what the target was, right? So if we come and see, in terms of the management's vision, we are saying that in the variable segment, okay, they're trying to target 2.5x of its in the next 2 years will be critical, right? So another interesting thing to see is the watches in the variable segment actually has grown quite a bit, right? If you see, look at the number of stores which have got added in the world of Titan, right? So about 70 odd 8 stores have got added in the world of Titan. 22 stores have got added in the Fast Track, and 62 stores have got added in the Helios brand, right? Now, you might say that okay, that's fine, but then why is the revenue contribution low? Because watches segment is not as pricey as your jewelry business, right? And hence, obviously, the revenue contribution will be lower, but the margin contribution of watches is somewhere around 13 to 14%. So it's a large business, and the number of stores seem to be growing pretty high, right? So let's take an average. Okay, so for this, all I want to do is take an average of what they've been adding. So we'll try to take an average of these two and try to say that okay, around 56 stores is what the company can add in the next 4 years. Okay, and similar thing we can do it for Fast Track and Helios, and we'll cross check these numbers whether these numbers actually match up with, and I'll just ignore the negative one because that is during COVID and that's an exception, right? So now let's populate the world of Titan numbers. Okay, so that's it for the variable segment. Tanishq, so now that we know that 600 stores is what they're trying to add up by FY27, let's try to get a linear number so that it matches up. Okay, so 600 minus 423 divided by, we got 4 years, right? So let's keep this like this and add up the numbers. Okay, so there you go. I mean, sorry.
Plane from Alan.
All right, so similar thing in case of Zoya, we're just gonna assume the same run rate of 2 stores, not much. But in the cart lane story, the story is going to be very different. In fact, we've actually assumed a very smaller number compared to what the company is actually doing. But we are okay being conservative rather than being very overly optimistic, right? So there you go. So 352, 395, right? Mia, again, we've already done with the calculation. We'll just spread the calculation across sheets. So, I've actually not done the Mia calculation. Sorry. So the same calculation, let's do it for me as well. It's around 47 stores each year. And the Titan I Plus, again, see, very interesting, because the Titan I Plus is somewhere that the companies has been gaining a huge amount of traction, uh, and that's pretty evident by the numbers that they're actually adding, right? Although the revenue contribution is not as much, so I'm just going to take an average of that, but very bullish on that. Okay, now coming to Taneria numbers. Okay, so Taneria numbers very interesting. So they are saying that they're gonna, try to target somewhere around 1,000 crores by FY27, right? So we'll have to do a little different calculation in this case, because we first want to know that, okay, 21 stores, right? And what's the revenue? So let's do a rough calculation here first. So we're expecting close to about, let's do the calculation here. 42 minus 21 divided by 4. So we're expecting around 5 stores to get added each year, right? Okay, so that gives us the total number of stores by category. Okay, and now let's just multiply this and to get the square feet, right? So what it will do is we just need to multiply the stores, total stores, by the average shop size, right? So average shop size we already have. This is not really going to change much, so we're going to assume that this is going to be same. Of course, there is a bit of research stating that Titan is actually trying to increase the shop size of Tanishq brand, right? Which can clearly be seen, between FY22 and FY23. You can see about 300, 400 square feet addition has been seen, right? And that's primarily because they're trying to get the Zoya brand also to be a part of Tanishq brand, right? Okay, so now once we have the average shop size, what we can do is we can multiply the number of stores, 467, okay, by the average shop size, which is here, right? And just need to repeat the calculation here. Okay, so and we just get the sum total as well. Now the only problem is that you cannot do this calculation, okay, brand wise, because if you see our revenue segment, right, how revenue per square feet has actually been presented, it is by the overall category, right? Because we don't have revenue per square feet brand wise, we have, segment wise. So now what we need to do is, we've actually done it previously also, we've just subtotaled the various segments square feet, right? So for example, Tanish, Zoya, Cartlane and Mia, they've been added to get the total square feet in jewelry segment. Similarly for watches as well. So WOT, which is World of Titan, Fast Track and Helios, has been added to get the total of what is the square feet under this segment. And similarly for the eye care, and similarly for Taneria, right? Now what we're going to do is we're just going to copy this. Since we've already done the calculation, we're just going to copy this across to the right. And revenue per segment, now that's an interesting piece, because per square feet, if you see overall, right? So let's just look at jewelry first. So if I just see, this about 19 odd percent, because gold prices had increased, then about 11%. So jewelry seems to have a huge fluctuation basis on what the price of gold is actually running in the market, right? If you look at watches, again, because they also started introducing premium brands and expensive watches, and if you look at the same thing in eyewear, you'll see about 13 odd percent, right? So very difficult to say where the gold price is going to be, right? To be very clear. Now the only thing that we can do is we can try to take a very, very conservative number here, right? So let's say revenue per square feet growth rate. Okay, so let's see the growth rate. So believe it or not, that will obviously happen. It's not that the growth will not happen. So we need to assume something, right? But of course, it's very difficult to assume that it's going to be exactly the same. So it's better to take a very, very conservative number, right? For example, here, weird numbers, right? So Taneria 15%, and then suddenly 72% increase in revenue per square feet, right? So this can actually happen for a lot of reasons. Sometimes it might be because the stores have opened, but they've obviously not operational, and hence the revenue has not kicked in, and because of which probably the revenue per square feet growth rate is not looking much, right? So here, what we will assume is about 7-8% growth rate, because that's what the management says in terms of what they try to do in terms of making charges, right? Increasing the making charges, right? And out here we can just take an average, because anyways it's not going to matter much because the contribution of watches is very small, right? And again, somewhere around 6 to 7% is something which is pretty decent in case of IQ, which is nothing but the inflation rate, right? Now out here I'll just take 10%, because as the number of stores will increase, the revenue will increase, and Taneria also has sarees all the way up to 3 lakhs, right? So we've assumed the growth rate for revenue per square feet. Now let's just increase the value and get the numbers, right? So those are our revenue per square feet numbers. Now all we need to do to get the number of what is the revenue segment wise is to just do the multiplication, right? So what we can do is now get these 3 names, 4 names, whatever it is, right? And just write revenue. Okay, and let's come to FY24 and multiply the total square feet segment wise multiplied by revenue per square feet, and make sure that you're dividing that by 10 raised to 7, because the revenue is in absolute numbers and we need to convert that into crores, right? So I'm just gonna paste this across. Oops, I think I have not linked it properly, or have I done? Oh, sorry. Just need to shift this a little down. There you go. So that's our revenue segment wise. Now let's copy this across periods. Okay, and then just do a sum total here. Okay, so that's our total revenue. Let's see what kind of growth rates we're getting. It's a pretty decent number, not very overly optimistic. 24% growth rate, which is in line with something which was happening. We will be happy to see if the performance actually is better than this, but for now let's also look at the different kinds of contributions is going to come. So divided by the sum total of the total revenue. There you go. So we are obviously expecting the variable segment to increase, right? And Taneria, of course, if you see the apparel business, somewhere around 2,840 crores is what I feel that the company can do, because 1,000 crores seems like a very under-promised number, right? Considering that 50,000 crores is what the market size is minimum of the unorganized space in the sari business, right? So you can try to do some formatting, just making sure that all these extra decimal places are gone. I will not take you through obviously doing the formatting, but this is our basic revenue forecast, right? In the next session, what we will do is we'll now move on to getting our basic operational costs to be forecasted. All right, so I'll see you again in the next session. Bye bye.